Welcome back to the After Hours Trading Show. We have a special guest with us. It's a good friend of ours, Kevin Mante. So why don't you go ahead and introduce yourself?
Well, David, Greg, thank you guys for having me on. As you know, and for the viewers, I've been a career banker. I originally started in 2009 in the wealth management and advisory industry. Been through equipment finance, and for the last 5 years, I've really been more in the commercial and corporate lending space. All in all, I'm really just glad to be here and hopefully provide your viewers some good advice. So why don't you guys tell me a little bit about what you've been doing on the show?
I'm more long-term trader, so keep viewers up to date on the Robinhood Challenge. I deposited another $40 in my account. I picked up another share of tea, and I kept the rest of the money in cash.
And for the active trading Robinhood, it did not go well. We had all three of those stocks break into a downward trend that broke some heavy support, and for that I bailed out of NWBI around 980, PK around 970, and NATR around 890. It was better to just take the loss and to hold these things. We're trying to active trade and show that it's really not anything easy or worth pursuing. So with that said, how about some advice that's good? Kevin, if you were to give a piece of advice to someone who's brand new to this, what would you tell them?
Yeah, thank you, David. You know, my advice is going to look a little bit more like Greg's portfolio with long-term holds, but one of the number one pieces of advice that was drilled into me really early on for a casual trader is really going to be to invest in something that you're interested in.
I enjoy sports, so how can I get into that?
Sure. So when I say invest in something that you're interested in, it's not necessarily just, I like this company, I'm going to buy it. But with sports, you're naturally following a couple big name brands that could be great for your portfolio. Nike, Adidas, Under Armour. These are all names that you follow. You know more probably about some of these contracts and players than I do. Nike, for example, though, we may know from following them, is that they're poised for growth in international markets. So use your passion for sports to follow what's happening with these brands, and I think Nike would be a terrific long-term hold for your portfolio.
That's great advice.
I absolutely agree. So you kind of covered sports there. I was wondering if you can give us some more examples that are outside of that range there.
Well, sure. We're here in the Detroit area, the Motor City, so I think we should talk about cars in the automotive market. And for those of you who follow, you know that Elon Musk and Tesla are kind of the bombastic name on the streets, but it might not be the stock that I would invest in today. I might look for something that is a little bit more of a long-term hold, like a General Motors that is doing well at home and is also viewed as a luxury car internationally.
But Kevin, Tesla is very trendy right now. What if I have like a fear of missing out? Get in them right now.
Yeah, and that's a risk that you're going to run with every stock. And there is some truth that, you know, Tesla exploded in the last couple months. They got $200 or $300 per share, over $1,000 per share now. So with my advice, you're going to miss out on some of those trends. We're not looking to capitalize on every market swing up and down. What you're really looking for is a good 8 to 10% return and long-term growth to either supplement your income today or help you build a better retirement for tomorrow.
So you mentioned not trying to capitalize on every single market swing. How long should these people be holding these stocks in?
You know, I think you should be looking at a good long-term strategy, something that you're comfortable realistically holding in perpetuity. Now, that's not to say you can't capitalize on certain market trends. Like a good example of where I might invest today is I follow the video game market. And I know that people just can't find a Nintendo Switch or Animal Crossing anywhere during the coronavirus. So I think Nintendo is not only a good purchase to take advantage of the swings during the coronavirus, but also a good long-term outlook that they are one of the big three video game companies that's going to give you a good long-term look.
So when I first started trading, one of the most intimidating things to me, there was numbers, abbreviations, percentages, and I just really didn't understand all of it. And I could Google it, but I just never knew what was important. For anyone who's new to this, what would you say they really need to learn as far as that's concerned?
Well, if you find a passion for this, then it can be helpful to learn more about the dividend yield as you build your portfolio, or I like to follow the price per earnings index. But for the casual investor, that's really not going to be necessary. I know, Greg, you're an avid traveler, so you know that perhaps that at the beginning of this pandemic, a lot of people were canceling their flights. So that might have been a good signal for you to sell Delta. But coincidentally, we know they're going to be a long-term player. So today might not be a bad time to buy. I don't need to understand all of these ratios in order to understand Delta's here to stay, and they're going to recover as you and I start to travel tomorrow.
Yeah, Kevin, that's all great advice. In the future, I'm going to be making a video how I made $3,000 in a single day trading options. That's going to be coming up in a future episode.
All right. Well, this is pretty much all we have today. Make sure you like, subscribe, and comment if you have any questions. It's been the After Hour Trading Show. Kevin, thanks for coming on. It's been a pleasure.
Thank you for having me, guys.